Hi everyone, this is Stephen from Pravana Insurance Services. Thanks for joining us this morning. Today we'll be speaking with Jim Farden with Principal Financial about their new and improved individual disability income insurance product. If you have any questions, you're more than welcome to type them down in the chat box in the lower left-hand corner, and they'll be addressed at the end of the presentation. So with that, I'll hand it over to Jim.
Good morning, everyone. Thanks again for being on the call. We're going to talk specifically about our California product, but I know there's already questions about is this the California product or non-California product. But the products outside of California are very similar to the products in California. So those who are on the call who have clients or are located outside of California, the product is very, very similar to this product. So with that, we're going to kind of launch into talking about the highlights of the policy, some basic policy information, some of the available riders, and the sales program and discounts available. Principal really designed this program as what we call an unbundled policy. A lot of our competitors have what we call bundled policies where all the riders are included. There's not a lot of flexibility with the policies that everyone really kind of gets the same definitions, the same riders, and all of that. So there's no really ability to really change the definitions or change the residual, or a lot of the riders are really kind of fixed, and they've taken that approach where one size fits all. Well, the policy that a doctor buys who's making, say, $300,000 a year is not necessarily the same policy that a salesman's going to buy that's making $50,000 a year, because their needs are different, and obviously their premium tolerance is a little different. You've really got to skinny down the product, make it affordable for the person who's making $50,000 or $60,000, and that's what we're doing with this program, is that we've unbundled everything. For example, we have 3 different residual disability riders. We have 3 different definitions of disability, and we're going to go through those a little bit today. But when you call in or when you reach out to Pravana and you need additional information about the programs, we'll be glad to email you the information. If you need a copy of today's slides, again, just reach out to Pravana. Pravana provides proposals as well as additional information. Just email them, newbusiness@pravana.com, newbusiness@pravana.com, and they'll be glad to get you a copy of these slides. In California, as well as outside of California, we've had a variety of occupational upgrades. Also in California, we now have other benefit periods available, how long benefits are paid to. Historically, most carriers have had the age 65 benefit period. So once you become sick or hurt, your benefit would stop at age 65. But most carriers now have to age 67 because most folks now that are in their 30s, their normal retirement age is going to be to age 67. We also have it to age 70 benefit period. Benefits would be paid all the way to age 70. A lot of carriers don't have that provision. And we're going to talk about a couple of sales programs very, very quickly, our DI Retirement Security and our association sales programs. But we will have additional seminars in the future to address those products specifically. The occupational upgrades in California are significant. We've had a significant decrease. Believe it or not, you don't hear that word very often in the disability income business, but our rates have decreased substantially for physicians and dentists in California as well as outside of California. So you're going to find that Principal is very, very competitive in the physician marketplace and the dental marketplace. In fact, our premiums in some cases against our 2 major competitors, Guardian and Standard, are double digits below their premiums for the same product offering. And again, if you need some spreadsheets or anything like that as far as doctor business is concerned, we'll be able to get that to you. We've compared our rates versus our major competitors. And again, if you need that spreadsheet, just reach out to Pravana and they'll be able to provide that spreadsheet to you. But you'll find that for physicians, Principal is very, very competitive and positioned in that marketplace. In fact, in California now, we'll issue up to $15,000 of monthly benefit for a physician. We'll participate with other individual disability or group LTD to $25,000. And you'll find that is the highest limit for participation in the state of California, up to $25,000. For other occupations, we issue up to $20,000. For example, an attorney, we can issue up to $20,000 of monthly benefit. Participate with other individual or group LTD to $30,000 of monthly benefit. So I had a case just recently where a gentleman was making over $1 million. He had $15,000 already in force with a carrier. Another carrier, it was probably about 8 years old, so it didn't make really sense to replace that policy. We wrote an additional $15,000 on top, so he had $30,000 of tax-free monthly benefit available to him through our new issue and participation tables and programs. Also, really, I wanted to quickly note one of the major changes we made also with any business owner, if they're a business owner, they own more than 20% of their business, you can increase their income automatically by 20%. It's called a business owner allowance. So for example, if a doctor makes $300,000 and they own more than 20% of their business, we can increase their income by 20%. So their income instead of $300,000 becomes $360,000. And then we can provide more individual disability protection based on that $360,000 income versus simply the $300,000. So again, it's a great opportunity for you to review your physician client's individual protection, do an income protection review with them. You'll find out that in most cases you're going to be able to sell them additional coverage on top of their existing plans with the business owner allowance and our increases in our replacement ratios, and also the fact that we can participate now up to $25,000 of monthly benefit for doctors. I'm not going to spend a lot of time on the basic policy. We've covered a couple of these, the benefit periods. The definition of disability, we have 3 of them. This is the base definition of our contract. It says basically that we protect somebody in their occupation. If they can't perform their occupation, they're paid their full benefit. If they choose not to work at any occupation, they can stay at home. So after the UROC period could be age 65, age 67. But usually with professionals, an architect, a CPA, the occupation period would be to age 65 or the full benefit period. So if you have an architect and they can't perform the substantial material duties of an architect, they're paid their full benefit, no questions asked. We don't force them to go to work in a new occupation. Most architects never do go to work in a new occupation. But that's the base policy. You'll get that when you get a proposal. Some of the available riders, we have a lot of no-cost riders and some cost riders, and we're going to go quickly through most of these. And again, a lot of flexibility with the cost riders, again, to make sure that the client has a protection plan that really fits in their family budget. Again, I think what happens a lot of times is we try to sell a client who's making $60,000 the same program that a doctor is buying at $300,000, and that just doesn't fit. The definitions don't fit. A lot of the riders don't fit. So again, you want to make this stuff affordable by unbundling it and showing them different cost riders that make sense for them. Our benefit update rider, really quickly, that is our rider that provides additional monthly benefit in the future. A lot of companies call it future insurability option. It allows you to buy more coverage in the future with no medical questions. So for example, if I buy $3,000 of monthly benefit, I'm making $50,000 today. Obviously my income is going to increase. I need more income protection in the future. This rider says we're never going to ask medical questions. You're going to be able to buy coverage all the way through age 58. All the way through age 58. Your monthly benefit can go up to a maximum of our issue and participation limit. So if I buy $3,000 of monthly benefit today, I can buy up to $17,000 of additional coverage to take my benefit up to $20,000 over the life of the policy, and I'll never be asked another medical question ever again. We ask for the tax return every 3 years. We then make an offer to the client. The client then accepts the offer. They can accept the full offer, or they can accept 50% of the offer, and you have just sold them additional coverage with no medical questions. I think Principals is one of the most liberal future benefit options in the industry. A lot of my competitors will decrease the amount of coverage or restrict the amount of coverage that you can buy after age, say, 41 or 45. We don't do that. There's no restrictions as far as ages. You can exercise your options all the way through age 58. This is a no-cost rider. It's free. We make sure that we put it on every policy. And then again, every 3 years they can buy more coverage from us. I'm going to skip that slide. The future benefit increase rider, what this rider does, it increases the benefit automatically by 4% each year. It kind of works in conjunction with the benefit update rider, where I'm increasing the benefit 4%, compounding for a couple years, and then the third year you'll submit your tax return, and then we'll offer you more coverage through the benefit update rider. And then policy year number 5 and policy year number 4 and 5, you'll get 4% increases again. So you have the riders kind of working in conjunction with each other to make sure that the client gets additional coverage in the future, no medical questions are asked. I'm not going to go over the capital sum. Limitation for mental nervous. Most carriers in California have benefits that pay for 24 months for mental, nervous, or substance abuse disorders. So outpatient care in California would be 24 months. Inpatient care would be to age 65 if the person was hospitalized because of this mental nervous condition. Again, most of the carriers in California have this provision. It's been in California for some time with us as well as other carriers. Again, it provides 24 months of benefit for outpatient care for conditions like depression or anxiety. However, conditions such as Alzheimer's, dementia, things like that would be covered for the full benefit period. I'm going to skip that. The catastrophic disability rider is kind of a new rider that a lot of people haven't seen before in California. Outside of California, a lot of carriers have this rider. Most carriers don't have this rider in California. For example, Guardian doesn't have it, and Standard doesn't have it. And what this rider does, it provides an additional benefit on top of your disability amount if you suffer a catastrophic disability. And what we define as a catastrophic disability is one of these 3 conditions: unable to perform 2 or more activities of daily living, or cognitively impaired, or presumptively disabled. And what it does, it replaces 100% of my pre-disability earnings. So for example, if I'm an attorney making $100,000 and I buy $5,000 of base benefit, I can buy this rider, and that would provide me $3,325 of additional monthly benefit if I suffer a catastrophic disability. It's almost like having a long-term care policy sitting on top of your disability policy. And we realize when people suffer catastrophic disabilities, there are additional expenses associated with that type of disability, and that's why this rider was developed. I like the rider. I like to use it in just about every situation, because most people, when they think of a disability, they think of this type of disability where they're going to be winding up in a wheelchair, or they're going to be unable to do 2 activities of daily living. This provides well over 100% of their take-home pay. So for example, that $100,000 attorney who becomes sick or hurt is going to get about 140% of their take-home pay, because we use the gross income. Obviously, they're not living on their gross. They have to pay federal tax, state tax. So really, when you look at this rider, it's providing about 140% of their take-home pay. The rider is really extremely competitively priced. It's about 8%. For example, if someone in their 40s, it's about 8% load to the premium, and you'll see that when you call in proposals for Pravada. Again, additional details: minimum is $500, maximum is $8,000. Cost of living riders. One of the things I always point out with a cost of living rider, a cost of living rider in the disability world is after you're disabled.